All right, go ahead, David.
I'm gonna say like 30 stocks that I own are down.
30. Wow.
I own a lot of stocks now.
You must
30
own
out of
all
100. How many
industrials
names do
and
you have in
consumer
your book?
discretionary.
So what's not fair is that I own a whole bunch of. I told you I bought a basket of Japanese stocks, so there's like 25 stocks. So that's that kind of brings my total up. But
I'd say
it's the ones that shouldn't go down that bother me. The ones that I'm really wishing go up that go down.
Are these your lottos, or are these your big cap, mega cap?
So for example, like today, Merck is down a lot. There's no exact reason for it. Nintendo, the last few weeks, and I've brought this up before, has been down a lot. So I had been up 100-something%. Now it's only up 70. I had sold, a bunch up 100, kind of as that discipline of playing with house money, but it's still. And you go, okay, well, you have Nintendo Switch. Everyone's going to buy it for Christmas, and then you have the new Nintendo movie trailer dropped. The last Nintendo movie did $1 billion, so.
Where's the follow through?
Yeah, it's kind of it. And so you go, well, I've been very successful in the past when things act like this, just selling and then coming back to them later, or not coming back to them, just saying, you know what. And so I've held on to this one. It's cost me a little bit. Now, yeah, I'm playing with house money, but it's still, it's still.
Once you see
once
you see the unrealized gain, it's kind of hard to get that that number out of your head.
The idea that you're playing with house money, well, you're playing with house money. It's your money, so it's not like it's someone else's money. So
exactly. All right, let's retweet this and get this show on the road since we started on time today. Everybody's probably shocked. Did you guys get your hats, by the way?
I did. Thank you
very much.
All right.
Yeah, but I see you're matching here today, Steve. Your hat matches your sweater.
I am. My wife dressed me this morning as I walked into my office.
Did she put the hat on your head too?
She did not put the hat on my head. I figured that one out all by myself.
It's cold here. It's 31 degrees this morning.
It's freezing. It's cold here. At least I sat on a lacrosse field all weekend too, freezing our asses off. Whew. It's cold.
That's tough.
Cold in the Bay Area. Yep. These poor kids are running around.
It's tougher when you're sitting there watching. It's warmer on the field when you're moving than when you're sitting watching.
For sure. Based on what these kids were wearing on the field, I was cold watching them. All right, you guys ready?
We are ready.
David looks busy.
I hate when things are down.
Did you find 31? Did you find a 31st stock that was down today in your portfolio?
I'm gonna. You know what? I'm gonna see if I can somehow buy a whole bunch of Powerball tickets. And
that's the solution for sure.
Securitize that. So, do you guys want in?
What are we getting a third of a third? What's the fraction?
No, you'll own a percentage of my wealth. In theory, you won't be able to cash out until. But the more I make, the more in theory as a percentage that you own.
I see. So that makes perfect sense. Sign me up.
I'm seeing if Michael Saylor will join my board.
I hear he's really good at these things.
I mean, what a great deal. I'm going to buy something else.
He's never met a credit facility or a leverage facility that he didn't like. All right, let's get this show on the road. Welcome to Wall Street Beats, everybody. I'm Steve Lamar, joined by our oil and gas pro, Bob Morris, and our healthcare pro, David Maris. And we're going to talk stocks this morning. Hope everybody had a nice weekend and is staying warm. Bob, what are you looking at this morning? I see some of these oil services names starting to get a bid. I saw Ben last night is starting to like Schlumberger.
Yeah, we talked a little bit about that the last couple of weeks, a few times with banks on the technical charts. They look real good. It would appear that a lot of the activity may have bottomed here, unless commodity prices go a lot lower. But I think the market's just looking at energy that's now only less than 3% of the total S&P, and saying, are some of these names sleepers if activity picks up here going forward, particularly on the natural gas side in the U.S. or internationally. And some of these oil projects, development projects internationally. Saudi Arabia's got a big gas project that's coming online. I think people are looking at some of the service names and thinking that there can't be a lot of downside. If activity starts to pick up here, there could be some upside. But in the meantime, the amazing thing is the lack of volatility really in the oil price, which is kind of interesting. We just keep hugging here around $60 a barrel, plus or minus. And, as we watch geopolitics, as we watch OPEC, we talked about last week, pausing on any further production increase through the first quarter of next year, and watching demand and what happens with the economy. And that gets tied back to interest rates and whether we get lower interest rates, which could be a little bit of a boost or fuel to the economy if that helps on the demand side of things here moving forward. But in the meantime, I think also that people are recognizing that even if oil hugs $60 a barrel here, a lot of these names look attractive. And we're probably in the third or fourth year now of this very strict discipline of these companies generating free cash flow. This sector has the best free cash flow yield of any sector in the market. And some of these names actually have pretty good dividend yield at the same time. So I think some of that's beginning to be recognized if people are getting a little bit tired, or I don't know if they are. I'm not the expert on the Max 7 or all these AI names, which I think continue to move. But as an alternative, I think energy is getting a little more attention, a little bit more focus. And then the other side of it is natural gas, which, yes, natural gas also a bit here today because looking forward, this extreme cold weather we're having now is going to lighten up here a little bit later in the week. But it's good we got cold weather early in the winter here in December, which is a positive factor. Storage levels for natural gas are still above the 5-year average, but they're coming down a bit, slightly below a year ago. So that's all positive. We continue if the forecasts are correct and we continue to have very cold weather here. That's a big plus for natural gas. And some of these gas names, Expand Energy, QT, and Terra Range, they've really taken off in the last 3 months. I mean, big moves up in the last 3 months. I note this morning, Terra Resources did a big acquisition, which looks very positive. They did a sort of buy and sell. They doubled down in the Marcellus and sold off a bunch of their Utica shale in Ohio, midstream and upstream assets. And not all, they just announced that this morning. I'm going to go back and look at that in a little more detail, but it looks like a very positive transaction for them, even though we don't own Antero Resources. In the meantime, I did finally nibble a little bit on Valero. It's a refiner, and I've been sort of watching this. It's moved up here. It's got a good dividend yield, about 2.6%. It's a name that benefits if oil prices stay at around $60 a barrel or come in even further here. It's sort of a hedge on the oil side since that's their input is crude oil. And at the same time, if we get a better economy, lower interest rates and things pick up here, stay strong, and, the demand for fuel is going to continue to be positive, and that's good on that side. So even though, I may be a little bit late. Yes, it was a little bit lower 3 months ago, and I hesitated or held off. It's pulled back a little bit here. So I'm starting to build a little bit of a position in Valero, sort of as a hedge, in a sense, against oil prices not ripping here, staying at these levels, or if they were to move lower, that's a lower input cost for them. In the meantime, as David and I were talking pre-show, C&Q has been the best performing name here among the E&Ps, and it's continuing to hold up very well here this morning. It's one of the few E&P names, along with Devon, that's up this morning, and that's a name that we continue to hold on to and continue to like. As far as the gas names, Expand, EQT, they've had a nice move here. We're just holding on to them. I'm not buying or selling here. We'll see if there's a strong move.
Are you selling any premium after this big move?
No, not yet. I don't want to sell any premium on these names. These are long-term holdings. These are ones I don't want to get. I don't want to get too cute with that. Get them called away. I don't want to get them called away because this is something if the winter really gets frigid cold, and we start to
These
see
could really
the
go.
demand pick up from these data centers and LNG exports, and Europe saying, look, we're not, they came out over the weekend, said they're going to permanently cease buying natural gas from Russia, which it permanently is real. That's a positive for U.S. LNG exports. So these are names I'm hesitant to do any sell any covered calls on just because I don't want to lose them, and I like these names as core holdings long term. So I don't want to get too cute with that.
Okay.
And I own them a lot lower cost level, so I'd have to see a good pullback if I were to add to what is already an overweight position at a lot lower cost basis. So, the only thing I'm doing buying, selling otherwise is just starting to nibble a little bit on Valero here, even though I feel like maybe I could have got it cheaper 3 months ago, but I want to be in it. So I'm just nibbling a little bit on it here. It seems to be the only thing that makes sense for me to do right now other than just sort of holding tight.
Okay. What about Wednesday's meeting with Mr. Powell and this bearish or this hawkish cut that we're expecting? Do you see that affecting your names anyway?
I mean, that's given a little bit of support to oil prices. If you look at the headlines and in the news, is to the extent that that's positive for the economy, provides a little juice to the economy, that's just positive on the demand side. So I think there's a little bit of that anticipated or built into the oil price here, holding up closer to $60 a barrel. So it's not a big mover. I think there are other things that move the stocks themselves more so than that. I think that interest rate cut sort of baked in already here.
Yeah, I agree. I think on Friday it was like 87%. All right, yeah. Mr. Maris, what are you looking at this morning besides your 30 of your, God, how many stocks must you have to have 30 down this morning?
So I mentioned in the pre-show that I have a whole bunch of Japanese stocks in a basket. So they're like 25, 30 of those. They're not the ones that are down. It's just, when you own more stocks, and I traditionally don't own this, I have more stocks today than I've had in a very long time. You're bound to have some that are down. I actually want to do that today. I'm going to talk about just screen, which are the highest, best performing, which aren't. We can talk about healthcare. The ASH meeting's going on right now. So you'll see a lot of oncology news out. Wall Street spends a tremendous amount of money and time talking about ASH and also the heart disease and the DDS, the digestive disease week. There are like certain conferences that they want to spend a lot of time talking about. Most of the news is either already known or digested. So for individual investors, it's really hard to make money on ASH abstracts and news because just things have already been previewed or it's moving so fast. And I want to own things for years, not like days. So I'm not going to really talk about ASH. Two of my companies, Cura, Kura, and Syndax, both had good news out of it. One's up, one's down. But that just goes to show you that you can have good news and not really, it doesn't show up on the day that it has good news. So
right.
Those are kind of the ASH plays. But if let me just refresh this. So we'll look at the top 3 and lowest performing. So we have in one account is Microsoft, Disney, and Nextera. Okay, that's good. I'll take that. Disney's kind of, I asked Berna earlier in the week, last week, what does she think? And she's like, yeah, she wouldn't, she was kind of positive now that it's way down, but kind of would look for under 100, I think, if I remember what she said. They have the biggest movie of the year just launching now. And in 2 weeks, they have Avatar, which I was never a fan of, but will probably do $1 billion, whether you like blue people or not. So I actually like Disney, and I like it at this price. I haven't bought any more because I have a lot. But then if I look at the lowest 3, you have Merck. Then you have 2 other companies that I'm not going to talk about. The whole pharma index today isn't doing very well, and I can't figure out why. There was nothing over the weekend that made it sound bad, other than more chaos at the FDA. And while that could be in theory negative, I spoke to a hedge fund manager over the weekend, and I said, look, the thing that I would focus on is, are drugs getting approved, and are they getting approved on time? So right now, a lot of journalists want to talk about the chaos and what it means longer term. And maybe that's the case. There's a counter argument that maybe the fewer competent people you have, and the idea that you're going to only require one clinical trial versus 2 clinical trials for approval, yeah, maybe you'll have more dangerous drugs, but you'll have faster approvals, and that's good for the industry in the short term. So I don't think that all this stuff going on at the FDA really is as negative as people think. I don't want to say longer term it isn't, but in the short and medium term, it really doesn't matter. It's sort of like if you've ever worked
any
for
different from the last administration, David? Is it materially? Are they materially
oh, yeah.
slower or yeah?
Well, right now it's not materially slower. Last year there were fewer approvals than there were the year before, but I wouldn't. That's just an up and down of the industry. I don't think that the timeline that companies are seeing, you're seeing some things get pushed out of like, hey, we need a little more time, but that's not the complaint. The complaint is, oh, you're bringing in people who don't care about science, or you're throwing away things that have been, or changing things that have been rules for a long time. So we can get into that, but the reality is that some of those things may turn out to be really good for patients, like only requiring one clinical trial versus 2. The FDA always had the rule of 2, but could, in its own discretion, choose to accept 1. Everyone thought that was a really good compromise. I personally think it's a really good compromise too, because any one study can show, I mean, we've all done that, right? We've all done really well on a test that we shouldn't have. And you're like, okay, great, I passed that course. But when it comes to drugs, that's probably a different case. I know Bob Morris is like, I have no idea what he's talking about. I always got straight A's. What is he? But that's the kind of thing of, yeah, it sounds like you're taking safety away. I would argue, yeah, you probably are. This isn't a great move, but is that a reason for the XLV to be down? I don't think so. I think it's just kind of had a nice move. But the XBI is up again in the face of a flat to down S&P 500. So I think you're going to see biotech continue to rally, especially into a rate cut that seems likely now. So remember, just a few weeks ago, everybody was like, no, there's not going to be a rate cut. So that's changed pretty dramatically.
Yeah, David, let's look at a couple of biotech. I don't know. Amgen's down a bit more than the rest of pharma today. I don't know if you saw any news, if there's anything there to comment on. I don't mean to catch off guard. I just noticed it was down a bit.
I don't. Yeah, I didn't see it, so I don't know. I don't know if it's if they had anything at ASH or something competitive at ASH and the rest. But it has had a nice move as well too. So. Z-Lab, another biotech, the only biotech that goes down because I own it. It's jinxed. I still think it's going to be a great 2026. So I'm not selling any of it, but I may be the one who shuts out the lights when that happens. So, and then we'll go to this other one, which has, okay. So Next Decade is up 3% today. That's in this other account is the number 1 performer. So this is one that Bob Morris is going to look into for me. They're building some giant natural gas terminal in Louisiana or something. NEXT is their name, or is their symbol. Owlet, OWLT, which has a hot present for newborns. If you have a newborn in your life and you're looking for a gift, they sell baby monitors. A little bit more sophisticated than a baby monitor, but Soleno, which is a biotech stock, is up a bit, been down a little bit. So this is more of a slight rebound or anomaly. And oncology, ONC, B1 Medicines, which is a Chinese company, they had data at ASH, and that's why they're up 1.5%. So kind of a mixed bag of what's been going on. There's no macro news. There's nothing today that I'm doing that I'm like, okay, I have to do this because of this news. I'm trying to just find things that might be a little bit cheaper, and so sometimes looking outside of healthcare this week. I do need to know more about Next Decade. The reason I mentioned Next Decade is a friend of mine bought $1 million worth of stock with his own money this last week. And I was like, oh, okay. And he's on the board. And so I haven't reached out to him to say, hey, what's going on, because obviously he's on the board, and I don't want to put him in a tough spot. Even if he doesn't know,
wear an orange suit.
no, and even if he doesn't know anything, I might take it the wrong way. So it's more that I want to understand why anyone would buy. This is it seems to me it be a pre-revenue company that's building this gigantic, and when I say gigantic, I mean it's like, I think the investment so far is $7 billion into
Wow.
this terminal.
It's big LNG, which, as we mentioned, if Europe's not going to buy any natural gas from Russia, it's a big positive for all the LNG export players out there. And I'm just looking at the management. I mean, it's got blue collar management. I mean, ex BG Energy, ex Exxon, ex Shell. I mean, these are people from big integrated companies. So they seem to be, reputable management team, which is the first thing you want to look at a pre-revenue type company. It does look interesting. I need to dig more into it, but that's one place that's going to benefit going forward is LNG. There may be a little bit of a dip in demand here, 28, 29, but long term LNG's where a lot of people are looking to make investments. So, interesting company.
Bob, I mean, I know nothing about it, but I would imagine you don't build something for $7 billion or whatever the end up cost will be on the idea. Like a biotech company will spend that much for a thing that might last for 3 years and then someone out innovates it. But this is something that's going to be around for like a useful life. Has to be 20, 30, 50 years, or what is the...
Correct. Yeah. In Louisiana, where it's easy to build big projects like this.
Sounds like you and I have a road trip ahead, Bob.
I need to look into this.
Road trip. We know how David likes to drive up and down the coast.
We'll go down during Mardi Gras next, February, March.
Our report will be like, yes, we're going to buy this just to go back. No, we'll have to. I really need you to look at that. That's going to be a good one.
Their CFO, I see a note saying their CFO did just exit in October. That's never a good sign. So maybe they found a good replacement. What's that?
I'm going to short it now. That's it. I'm just I agree. CFOs usually know more than they let on to. So, but pre-revenue, I figure that he can't know that much.
No, and if it's that infrastructure that's big a build, it's going to take a while for that to get online. A lot of catalysts to come, positive and negative.
Yep.
Yeah, so I have to dig into it. I just know it from the surface. So interesting. You already bought it, David? You're already in?
I already bought a little. I don't own as much as I own C&Q, but I own a little bit. So
because your buddy bought $1 million worth. Okay.
Well, again, he also owns more than that too, and he's not the kind of person that just throws. I mean, I don't know him that well, so. But $1 million is $1 million, right? It's not.
Sure. That's real money. That's real money. How about
we'll do some due diligence on it now.
All right.
How about the favorite name I like to talk to you about, David? Hims and Hers. Any news or thoughts on that lately?
It's had a really good move to from the low mid 30s. It topped 40 last week. Yeah, to now to the high 30s. It's building this nice base. I still think that it's going to be a great long-term company. And I think that if you bought it, if I bought it at, I'm going to say so that don't get into any trouble. If I bought it today, I would think that I'd make money in a couple years. Over the next year or two, they still have a lot of hard work to do because they're launching all these other verticals. So the comps are going to get tougher because you've had great quarters, you've had blowout quarters.
Yeah.
Do I think that I'm not ready to pull the trigger? I was actually last week. I was like, you know what, this looks pretty good, and then it topped 40. I was like, oh, now it's 38. So I'm going to stick to I'm going to try for the low 30s and hope that there's something that between now and the next little bit, and then just kind of scale into it again. I don't think that there's any rush.
Okay.
But it looks
And you
like
could have a
it looks based on
softer
what.
market too that could take this down sometime over the next 3 to 6 months too. So
Yeah,
there's
and if
that.
you notice, like the news around it has been much lower, even though the stock's still at 40. Because it had gone from 15 to 40, there were lots of people who were shorting it and getting involved, and the news flow and the chat pages, all these things where people were freaking out about them and trying to get their side to win. Now it seems like both sides, I don't know, detente, but both sides are like, oh, okay, there's not a lot to do here at this price, and I don't think that they're shaping up for a blow up, but that's kind of why I'm like, you know what, I want to own it because I do believe it in the long term. I just don't think today's the right price. So.
Yep. Okay.
By the way, speaking of
All right.
which, one of our former I own a stock Yeti. So I bought it because I used to own it, then I sold it, and then one of our former compatriots did a red flag on it, said, "Oh, it's a red flag. This is really bad news," and whatever. And of course, what you could see at that point was the backside of a horse running out the barn, and I was like, okay, well, the horse has already run out of the barn. I think we can probably buy it here. And sure enough, it's done well since then. So I'm up like 18% on that so far. And why am I sticking around on a small consumer goods product company that has had problems in the past, right? I mean, they haven't executed that
Sure.
well.
No.
Right now, they have a number of products that are on everybody's like best, wished for lists. They have new colorways that came out, and that's as silly as it sounds for a pharma guy to be like, so that's how you sell things, color? Like that's like you're used to. I look at things that are saving lives, and now it's like, oh, you have a new orange.
Sold a lot of Beats headphones with different colors on them, David. So
yeah, and that's the part that I have to start to really understand better because, well, they've launched 2 or 3 products that people are crazy about. One is a bucket, crazy as that sounds, but they have a bucket that has a swivel top. So for campers who buy these buckets to store things in and then sit around a campfire on a bucket, to have a cushioned swivel top, they're selling these, I don't know, $50 swivel tops for a bucket. And people can't get enough of them. They have a couple other
So
things.
what does it do? You put a bucket on something that spins around.
So they sell
like a
this
lazy
really
Susan for your bucket.
Yeah, exactly. They sell a really sturdy gear bucket that everybody really likes. So if you're like a fisherman or a camper, you're probably going to have one of them because it's indestructible. You can stand on it. There's nothing you can do to it other than melt it. But someone came up with this idea of absolutely. It's a lazy Susan that sits on the top of it snugly, and it has a cushion. And so you essentially you're storing things, but now you have a chair.
You can sit on your bucket. Your bucket can be your chair, your swivel chair, or whatever. I get it.
Yeah.
I get it now.
You wouldn't want to sit for 2 hours on it, but it's way more comfortable than a bucket. So things like that. They have a little gearbox that Pelican sells a great one, a waterproof gearbox that's about the size of a half a shoebox. They came up with one. Doesn't sound like rocket science to me. People love it. Put your phone in the beach, on the beach, put it in there. It's safe. I happen to think that it makes it very easy to take on the beach. So it's very, grab the person's wallet and phone at the same time. But
Right.
But again, it's on a number of like best gear, like for people who are campers or fishermen, outdoor people or people who aspire to be outdoor. It's on lists of things that people want. So I'm sticking with
What
Yeti.
is this bucket? What does this bucket cost, David? What is this? What are we paying for a bucket with a swivel top?
Oh my gosh, the Yeti bucket. By the way, nothing for the Yeti Rambler bucket in blue sky. Let's see here. It says it's on sale. This one has a handle though. Let's see, that's $120, but that's not That's not usually what they cost. That's a really nice one. But the
So roughly $100.
yeah, they're not.
Hey, David, what was the red flag that knocked it back to begin with, and is that now in the past?
Hold on, I'm still looking for bucket lid swivel. Because you by the way, you buy the swivel thing separate from the bucket. So it's a $60. It's $60 cushion top.
So I assume I couldn't put that on my Home Depot bucket?
No, but maybe you could,
top,
but
no.
you might fall through.
Okay.
Yeah.
All right. You guys want to wrap it up? Good Christmas
No,
ideas
Bob
there
asked a question
from Mr. Maris.
What? Yeah, why exactly? So the loadout bucket
So the question
is $40 at Dick's. So you're looking at $100 all in for a swivel bucket chair, and you'll impress all your friends,
your fisherman
for Christmas.
Friends. There you go.
They were missing numbers. They have a really, I say, bad supply chain. They would argue they have a great supply chain, but they're really reliant on China. And so with all the tariffs and then some disruptions that happened, they just weren't on top of things. They also missed they make Yeti drinkware, which a lot of people have Yeti cups.
Yep.
But they missed out on that entire Stanley colorway, thing that went crazy.
Cup,
yeah. And so they lost share there. And, that was a bit of a fad. They've now have their own, but they still don't have an ability to drop colors like some other competitors do just because they're bigger.
Right.
I'm sure the person who had red flagged it had other issues. I didn't really pay that close attention just because I'm trading around it. I've owned it before. I know that it's a premium brand that in good times people will pay for. If anyone has a Yeti cooler, you're going to have it forever. That's the thing that I don't like about it, is that no one's going to buy two, right? Unless you're a commercial fisherman or you have, you're not going to buy two Yeti. They last forever. So
yeah.
How many swivel bucket chairs do you need?
My water ski boat comes with a Yeti in the boat, so they're putting Yetis into ski boats. Just when you buy the boat, that comes with a cooler.
And the reason for it, right, is a bunch of reasons. One is it's practical, but the other is it confers a value, right? You're like, oh, okay, quality. I'm going to have quality things on my quality boat. So
yep. No, it's a nice cooler for sure.
What size?
All right, let's wrap it up there.
A Yeti 65. What size
What's
Yeti
that?
cooler is it? Is it a Yeti 65? Those are nice.
I have no clue what size it is.
See,
just
I know,
just right for the ski boat.
I know my Yeti products, as you can see. So
okay, I don't know the model number. All right, guys, thanks for
the 65. By the way, the 65 holds 65 cans.
Is that right? Is that how they measure it?
I think so. I think that's how they measure it.
So do they have a Yeti 12, a Yeti 24, a Yeti?
Yeah, they do. Case? So I messed up and I bought like the 45, which kind of is big and bulky and can hold a sandwich. But
it keeps it cold.
It keeps it darn cold.
That sandwich cold.
Yep.
All right, guys, let's wrap it up. Thanks for joining us on Wall Street Beats today. Steve Lamar, David Maris, Bob Morris. We'll catch you back here on Tuesday, tomorrow. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats. And any other closing thoughts, guys? Einstein. Oh, we forgot about the Einstein bars. Go get yourself an Einstein bar at einstein.energy or on Amazon. If you don't like it, they're good. All right, guys.
Certainly are.
Have a great day. Thank you, Jen.
It was